Now, while some investors are worried about inflation or tapering or economic growth, there's a very big growing number of market participants that are starting to worry about taxes. For months, it was all talk, but now we've seen the actual numbers. The top rate for corporations, 26.5%. For individuals, almost 40%. And there's a lot else in there as well. So how are people reacting? What are the strategies that we should be using, and how much of a concern is all of this for some investors? Joining me now is Emily Rubin, financial advisor at UBS Global Wealth Management. Emily, it's good to have you. And this is one of those times when market strategy sort of dovetails or has a more important than normal emphasis with tax strategy, right?
Absolutely. I mean, the House bill last week came out and was actually a bit more moderate than the White House proposal. So the market was able to take it in stride. But there are going to be a lot of changes, and we're going to be watching them closely. Anything that increases taxes to an extreme amount, or new things that might come out in there, could definitely impact the markets. But this week, I think it was a sigh of relief. Our ultra high net worth clients were expecting the increase in income taxes, and the capital gains rate that they put in there is actually a little lower than expected. Our entrepreneur clients are particularly concerned about changes to qualified small business stock and grantor trust, because a lot of them are impacted by that. So there's still a lot to come on this, but we'll be watching very closely.
One more question on this. What kind of strategies become important if you have these kinds of concerns about policy? You know, is it stuff that people do? I'm thinking, for example, about high earners. You see all this talk about deferring income, all of these. And the reason why I ask is, it goes back to the net effect of all of these from a macro perspective. How much revenue is this really going to raise?
Absolutely. And there definitely were some strategies that we could have done with capital gains, though the bill has in it that the capital gains rate increase will, as of now anyway, increase as of the date it was introduced. So it's too late for those strategies. But certainly for people who have lumpy income or income they could pull forward, it's definitely something that they should be thinking about, before the end of this year.
And so what would that affect markets then? If people are going to pull income forward, what would that mean for stocks?
I really actually don't think it's going to have much impact on stocks. That is, if there were big changes to capital gains rates, I was concerned, if it was starting next year, that there would be a lot of sales, and that could have impacted the market. But the investors that are impacted by the ultra high net worth investors who are impacted by this don't actually represent a huge percentage of the U.S. retail market. I believe it's only 25%. So any changes that they're making really doesn't have a huge impact on the overall market.